Today we will be discussing some myths around corporate tax. That's just another myth. Non-designated free zones can offer significant tax relief, especially on income from intellectual property, commercial properties, and certain commodities transactions. Just because they are not designated free zones does not mean there are not any tax benefits available.
That's actually a common myth. All companies in designated free zone do benefit from tax exemptions, but it is important to note that these exemptions only apply to specific type of income, such as income from distribution, manufacturing, and processing activities. However, business must meet certain conditions to qualify for these exemptions. So make sure that your business align with the eligible categories or you may not able to claim the exemptions.
It's a common misconception that businesses with no profits don't need to file. In reality, businesses might still be required to file tax returns even if they don't owe any tax. Failure to comply may lead to penalties for non-compliance.
No. Corporate tax applies to any business earning above a certain threshold, which is currently 375,000 dirham. This includes many small and medium enterprises. So, business of all sizes need to be aware of their corporate tax obligations. So, even a small business need to understand their corporate tax obligation and file accordingly.
That's a big misunderstanding. FTA does not tax accounting profits. They tax taxable profits, which are calculated after making certain adjustments to the accounting profit. Therefore, taxable profit and accounting profit are two different things.
Not at all. VAT is a consumption tax on goods and services, while corporate tax is based on profits. So, the filing process and the calculation of corporate tax are much more complex, and businesses need a separate approach for each tax. So, corporate tax and VAT are very different, so businesses should prepare accordingly for each tax requirements.
Actually, million companies can avail small business relief if their annual revenue is less than 3 million dirhams, provided they register and file corporate tax returns. However, if they opt out of this relief, they won't be eligible for the benefit at a later stage.
Yes, actually, mainland companies may qualify for small business relief if their annual turnover is under 3 million dirhams. This exemption can apply for even several years, provided they register and file the tax returns on a time and properly. Yes, it's a very common belief that there are no taxes on international sales or third-party shipments. However, that's not entirely true. While there are some certain exemptions for specific type of transactions, business may still need to subject to tax on these certain activities. So businesses involved in overseas sales or third-party shipments should be aware of the specific tax rules to avoid any tax surprises. These misconceptions will be clear now. It's essential to be well informed to make the right decisions. Proper knowledge ensures that the business can make the most of available benefits while staying with the legal requirements.